Has the Dow Jones already hit its major 18-month cycle peak? Welcome back to our weekly market breakdown for August 3rd, 2026. Today, we turn our attention back to the Dow Jones Industrial Average following our last detailed review in June. By systematically analyzing the shorter underlying subcycles, we can unlock essential clues to project exactly where the market is headed next. Make sure to subscribe and hit that notification bell so you never miss a critical cycle update. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. Let's start by the 18-month cycle. From the previous April 2025 18-month cycle low to the July 7th new all-time high, 15 months have elapsed. Since the Hurst nominal model assigns the 18-month cycle an average duration of 17.93 months, it remains reasonable to project the next 18-month cycle trough forming between September and October. For detailed alternative scenarios, I recommend referencing our June analysis. Because this timeline is an estimation, and because sound trading relies on precise information provided by cycle analysis rather than guesswork, the 18-month cycle itself is not ideal for executing direct trades. Relying on monthly cycles offers structural long-term perspective. As of right now, the 18-month cycle for the Dow Jones Industrial Average remains in fundamentally bullish posture. Now let us inspect the next shorter wave, the 40-week cycle, to gather clearer insights into what lies ahead in the near term. The 40-week cycle. The 45,728 low from November 2025 remains, for now, the last recognized 40-week cycle trough. Applying the Hurst nominal model's average length for a 40-week cycle, which is 38.97 weeks or 272.80 days, we can reasonably expect the next 40-week cycle low to form during mid-August. By the Hurst rule of synchronicity, this feature should also align with the upcoming 18-month cycle trough. Why is there such a discrepancy between the monthly and weekly analysis? First, the monthly average incorporates data from the last 4 18-month cycles. It takes considerable time for recent price action to shift the monthly historical average. When this lag occurs, it's always best practice to weigh the shorter cycles more heavily as they adjust to price developments much faster. Second, there's a distinct possibility that the last 40-week low was misplaced. If so, the next best placement for that 40-week low is March, which would stretch that specific cycle to 50 weeks long. Remember, the nominal average length for the 40-week cycle is 38.97 weeks, making 50 weeks exceptionally long, and projecting the last week of November as the probable target for the next 18-month cycle low. If the DJIA forms its low at the end of November, and since cycles in bear trends tend to run longer than standard nominal averages, this would signal clear bearishness. During the last rally, the DJIA triggered a valid buying signal by crossing above its cycle line at 47,621, setting an upside target of 49,514. That price target was reached very quickly and even exceeded. For now, there are no major signs of fundamental weakness, and the market trades comfortably far above its FLD. If you are finding value in this Hurst cycle breakdown, make sure to smash that like button. It really helps the algorithm push these videos to other traders. And if you haven't already, subscribe to the channel so you never miss our key weekly cycle turn points. The 20-week cycle. Even if the 40-week cycle low position remains open to debate, the 20-week cycle brings clarity to the overall setup. Whether we place the 40-week low in November 2025 or March 2026, the rule of synchronicity designates the March 2026 low as a confirmed 20-week cycle low. As mentioned earlier, even if we anchor the 40-week low in March, making it 50 weeks long, dividing 50 weeks by the 19.48-week nominal average yields roughly 2.56 cycles, nearly 3 full cycles. Therefore, we can label the March 2026 trough as a 20-week low with a very high degree of confidence. For 20-week cycle traders, this offers highly valuable actionable data. This setup was confirmed when the market crossed above its cycle line at 49,497, projecting a potential upside target of 53,937, a 4,440-point move. By printing a new all-time high of 53,294 on July 7th, the DJIA missed its projected target by just 643 points, or 1.19%. This upside projection remains technically valid until price crosses back below its cycle line. What can we expect next for the 20-week cycle? Only 18 weeks have elapsed since the March low. As highlighted in my previous update, the next 20-week cycle trough is still anticipated around the second week of August. However, with a low forming at exactly 17 weeks, there's a chance the actual 20-week low already occurred during the third week of July. We will need confirmation from shorter cycles to verify this. Technically, at this stage of the cycle, the DJIA should cross below its cycle line during the next correction to provide a downside target. However, if the market remains strictly above its FLD during the next 20-week low formation, it will confirm an extraordinary amount of underlying bullish strength in the American stock market. The 80-day cycle. Following the Hurst rules of synchronicity, the March 2026 trough was also an 80-day cycle low. Following this 80-day low formation, the market crossed above the 80-day FLD at 49,311 on April 22nd, projecting a potential upside target of 53,565, representing a 4,254 point or 8.62% potential move. On July 7th, with the new all-time high of 53,294, the DJIA came within just 271 points, 0.5%, of its target. Because this peak fell comfortably within the standard 1% margin of error, the target is considered fully met, maintaining a 100% success rate across 2 consecutive positive trading signals. The first 80-day cycle following the March low concluded on June 10th, lasting 76 days, just 8 days longer than the 68-day nominal average discovered by J.M. Hurst over 50 years ago. The next 80-day cycle trough is expected to form around August 17th. According to Synchronicity, this should coincide with the 20-week, 40-week, and 18-month cycle lows. Technically, price should cross below its FLD to confirm the 80-day cycle peak. Following the June 10th low, I drew an 80-day valid trend line VTL. A cross below this VTL confirms not only the 80-day peak, but also signals that the peak of the next longer cycle, the 20-week, is either formed or forming. By printing a low of 51,547 on July 23rd, the market crossed below its VTL, confirming that the July 7th all-time high is potentially both the 80-day and 20-week cycle peak. We must now monitor closely where the rally following the July low stalls relative to its VTL. The 40-day cycle. In my June update, the 40-day cycle low was expected to land on June 5th. Just 5 days after that projected date, on June 10th, the DJIA formed a low at 49,913 right on its cycle line, reinforcing strong market bullishness. Adding 34 days, the Hurst average length for a 40-day cycle, to this low yielded July 16th as the potential target date for the next 40-day low. In reality, 7 days later, July 23rd, the DJIA formed a low at 51,547. During this move, price crossed slightly below its cycle line, FLD, but the cross was not clear enough to trigger a formal downside trading signal. The market subsequently rebounded, trading along its FLD on its way to forming the next 40-day cycle peak. During the next 40-day cycle trough sequence, scheduled around August 26th, the market is expected to cross cleanly below its FLD to project a new downside target. On July 29th, the DJIA crossed below its cycle line at 52,356, establishing a downside target of 51,418. However, because this low should theoretically align with longer cycles, we can anticipate a sharper overall decline. In summary, while the macro 18-month cycle on the Dow Jones Industrial Average remains structurally bullish, the shorter subcycles indicate that market momentum is weakening. The recent breakdown below the 80-day valid trend line confirms that the July 7th all-time high of 53,294 is likely the peak for both the 80-day and 20-week cycles. With synchronized cycle lows converging toward late August, traders should prepare for potential downside volatility and strictly monitor FLD interaction levels. That wraps up this week's Dow Jones analysis. If you want deeper insights, tactical 20-day cycle updates, or the full roadmap, simply scan the QR code on the screen right now or head straight over to tradingmarketcycles.com. Don't forget to hit the like button, leave a comment with your thoughts on where the Dow is headed, and subscribe for next week's analysis. Thank you for watching Trade Smart, and I'll see you in the next video.